Today we're gonna guys, welcome back to the Finance Runners YouTube channel. Today we're gonna be looking over my dividend portfolio for the month of May 2020. This dividend portfolio is mainly of single stocks, dividend paying stocks, of course. But I do have a little bit of growth incorporated. My account is way too small and I'm way too young to just do dividend investing, in my personal opinion. That's why you guys will see a couple of more growth oriented ETFs and stocks. So let's start off first of all with VFE. VFE is pretty much just the S&P 500 tracker. It's pretty self-explanatory. Nothing crazy going on there. My current allocation for it is at 11%. The goal is for it to be a quarter of the portfolio. Since it is pretty much a new portfolio, slowly we will get to that target allocation. But yeah, currently it's at 11%, and I'm definitely buying more each and every week. Next we have is QQQ. It's pretty much just a Nasdaq tracker. It's been performing honestly very good over the last 5 years. I've really enjoyed owning it. The current allocation is 19%. The goal, of course, it is to get it to a quarter of the portfolio, and the S&P 500 and the Nasdaq will be comprising of 50% of the portfolio, and then the rest of the 50% is all dividend paying stocks. Next on the list, we have 3M. 3M is another one of those world-class companies that, in my opinion, is offering a very good value right now to buy, especially if you're a long-term holder. My current allocation of it is at 6%. The goal is to get it at 10%. I don't know if I want to keep it at 10%, the target allocation, especially as I add more stocks. I'm looking at Johnson & Johnson and Procter & Gamble to hopefully add in the portfolio soon. So these target allocations probably will change for the next month, but for now the target is 10%. It's currently at 6%, and I am currently buying more each and every week. Next is Disney. I have a love and hate relationship with Disney, where I bought it at my first share. I bought it at $140. After that, I've just been averaging down on it. I do not mind holding it, especially over the long term. I do believe it's going to easily become a $200 to $300 stock over the long term, especially with Disney Plus involved. But for now, especially with the dividend cut, and surprisingly, the stock didn't drop with the dividend cut, which was pretty amazing to see. That pretty much means that a lot of investors kind of, I guess, listen, I don't personally see it going under $100 anytime soon, but yeah. Disney, which my current average, I believe, is around $116 a share. Another world-class company that I believe is showing us a good value right now. Yeah. Next we have is TD. A lot of Canadians like myself tend to own all five Canadian stocks. I personally don't believe in that. I believe that just having one, whichever one you prefer, is probably the best bet. I like TD a lot simply because of their expansion towards the US. And it's another one of those world-class companies that I love for the dividend. It's currently giving us a 5.54% yield. Can't complain. Honestly, really cannot complain. Next in the portfolio is Fortis. I was extremely happy holding Fortis over the last few years, especially for the growth. But not only that, it did amazing in this market downturn. It pretty much didn't even get affected. I'm really happy, really helped stabilize the account and help me outperform the S&P 500 in the downturn. Really happy. Next we have is Algonquin Power, another utility stock that is slowly growing. The only reason why I'm iffy about Algonquin Power is because of their debt level. It is a little bit higher than what I would want for a utility stock, but I'm willing to stay with it. It's been rewarding me over the last few years extremely well, and I will continue to hold. But if a opportunity, like a really good opportunity, does arise, I will be selling the stock. But yeah, that's it for Algonquin Power. Next we have is AbbVie. Extremely happy with AbbVie. Their deal with Allergen currently just closed yesterday on Friday. Extremely happy with AbbVie. I'm hoping for it to go back to its original numbers, but hey, for now it's at $84 a share. My average price on it's about 70. Sorry, no, not 70, about 75, I'd say. Extremely happy with AbbVie. Next is Enbridge. Enbridge is my only direct oil play in this portfolio. I like AbbVie for two main reasons. One, because it's the third biggest company here in Canada and the government supports it a lot. And two, they have a lot of contracts that are like 20 to 25 years out, which a lot of other companies have signed. So they have customers that are going to be sticking with them over the long term. And they have a lot of new projects in the works to help the company grow. Last but not least in this portfolio is Ryokan. Um, I like Ryokan personally because all around me, Ryokan's been buying a lot of property. They own pretty much all the shopping malls around me here, and they're, I'd say they're one of the easier companies to understand. My current allocation for it is at 5%. I probably wouldn't want it anything above two. It is a riskier stock, but as I add more high quality companies into this portfolio, I'll probably be bringing the current allocation for Ryokan down a lot. So for this portfolio, what I can see like right now is probably adding Johnson and Johnson. It's pretty much the only stocks that I wanna add into this portfolio. I'm not really rushing for any other stock. I might start out a position right now, and currently I believe it's at $148. I might start off a small little position and keep averaging up or down wherever it goes over the next few coming months. But we'll see. We'll see how that goes. I haven't really made a decision about that yet. And yeah, that's pretty much it for the account. If you guys have any questions, leave it down in the comments below. And thank you guys very much for watching. See you next time.